So we are going to look at a question called bits and pieces, and it's coming from decision-making techniques. And I'm hoping that you have, by this time, looked at all the sessions for the recordings for classes, and even the ones for questions. They have been attempting section A and B. So what we are going to be doing is to get a few questions here and there that I can help you with. Perhaps you also let me know which areas you need more assistance with, that we can clear those out. And then we so that we prepare very well, and then afterwards you do some questions, some more papers, and then we start get ready for your exam. So this question comes from a whole lot of questions regarding decision making. And basically, decisions that we are making here have to do with either spending some money on something, or maybe manufacturing a product. Some of those, as we shall see. But at the end of the day, what you need to know is that these questions come in very many different shapes, and the best way for you to actually be on top of it is to be able to think through what is being given to you, and then come up with a decision on actually how to deal with some kind of question. So what I'm trying to tell you is that you can practice as many of these questions as you can, but the chances of you finding a completely new question in the exam regarding decision making are high. And what you do when you get it is basically look at the facts that are given to you and then come up with a way of making the decision. And the decision will be based on something that costs the least, or something that gives you the highest reward. So you look at cost-benefit analysis. So here we have been asked on this question, bits and pieces, calculate whether the Sunday opening incremental revenue exceeds the incremental costs over a year. And they want us to ignore inventory, and on that basis reach a conclusion as to whether Sunday opening is financially justifiable. So there's something about Sunday that we need to identify and see whether it makes sense for us to actually open on Sunday. So then they want us to discuss whether the manager's paid deal is likely to motivate him, which is time off and bonus. And then also discuss whether offering substantial price discounts and promotions on Sunday is a good suggestion. Okay, so now let's go and look at the question and what is given to us. So they are saying that Bits and Pieces operates retail store selling spares and accessories for the car market. It has previously only opened for 6 days per week for the 50 weeks of the year, but they are trying to also open on Sundays. So you have always been opening for 6 days a week, but we are trying to see whether opening on Sunday is going to be better. Now, that's the decision that we want to actually evaluate. So how do you go at it? As I said, you basically, first of all, look at the incremental costs of opening on Sundays. Then you look at the incremental revenues of opening on Sundays. And then you come up with a discussion of whether the costs outweigh the benefits, and then you don't do it, or the other way around. So the sales of the business Monday through Saturdays average at 10,000 per day, with gross profit 70% earned. The expectation is that the gross profit earned on a Sunday will be 20 percentage points lower than the average and on the other days of the week, because they plan to offer substantial discounts and promotions on a Sunday to attract customers. Even the price reduction, Sunday sales revenue expected to be 60% more than average daily sales for other days. These days, the Sunday sales estimates are for new customers only, which does not allow being made for those customers that may transfer from other days. B&P buys its goods from one customer. Supplier gives 5% discount on all purchases if annual spend exceeds 1 million. It has been agreed to pay time and a half to the sales assistant that works on Sundays. Normal hour rate is 20 per hour. In total, 5 sales assistants will be needed for the 6 hours that the store will open on Sunday. They will also be able to take half a day off, that is the 4 hours during the week. Staffing levels will be allowed to reduce slightly during the week to avoid extra costs being incurred. Okay, so the staff will be supervised by a manager currently employed by the company and paid an annual salary of 80,000. If the manager works on Sunday, they will take the equivalent time off during the week when the assistant manager is available to cover for them at no extra cost to B&P. Manager will also be paid a bonus of 1% of the extra sales generated on Sunday project. The store will have to bill it at a cost of $30 per hour and heated at 45 per hour. Heating will come on 2 hours before store opens in the 25 winter weeks to make sure it is warm enough for customers to come in at opening time. The store is not heated the other weeks. The rent of the store amounts to $420,000 per annum. And so that's what we have been given. Now, I'm sure, or I'm hoping that as we have been reading through, you've been seeing some of the points where these questions are coming from. The major point is basically deciding whether opening on Sunday. But then there are other things that are being told you, things like managers pay, where they are saying when he works on Sundays, he will be given time off and a bonus. So now, let's first collect the information and calculate the benefits and the cost of opening on Sundays. So what they are asking us to do is basically calculate incremental cost and incremental revenues. So let's do that. So what we are going to do is to have the costs and revenues. So let's first look at incremental revenues. So they told us here that the revenues average 10,000 per day, but the gross profit on Sunday will be 20% points lower than the average for that week. But the revenues are going to be 60% more than the average daily sales, which means that when you are going to look at the revenues, the Sunday revenues would be more than 60%, will be 60% of those. So it means that it's going to actually be 10,000 multiplied by 1.6. So 10,000 multiplied by 1.6, that is per Sunday. And we have 50 weeks in a year. So that gives us the incremental revenue, 800,000. Okay. Now, Let's look at the cost. So for the costs, we are going to first of all look at, because remember they have given us the gross margin 70%, but the cost of sales for Sunday are going to basically include, are going to include the cost of sales that are computed using the gross profit margin, although the margin on Sunday will be 20 percentages lower. So if the profit is 70%, then it is actually going to be 50%, which means that the cost of sales is 50%. Understand that?
Yes.
Yes. So going to be it's going to be 60%. So then, so we have the cost of sales. %, of the revenue, okay, which is 400,000. 400,000, that's the cost of sales. But we need to see whether there's anything that is going to maybe change that, because we've been, let's see, remember what has been given us is average. So average of 10,000 per day, 70% gross profit. So the profit margin will fall, but then the Sunday revenues are going to increase. So now, then also there is also when you are buying from a supplier who gives a 5% discount, okay, if they spend more than 1 million. Now, so it means that if they are going to spend more than, because now we need to know whether there's going to be a discount. So is there going to be a discount? So to know that, because revenue is we have revenues of 800,000 in a year, but what have we been like having for a month? I mean, for the 6 days, because remember, for the 6 days you've been doing 10,000 times 6. So that is, because I'm trying to determine if we are going to since we remember we have been getting from one supplier. So if we have been buying from that one supplier, the cost of sales for that one supplier would have been the 10,000 per day multiplied by 6 days multiplied by 30%. That would have been the cost of sales. Okay, so it means that if we are to try to look at the cost of sales that we are going to incur extra from the new working on Sundays, is basically the revenue minus the cost of sales, because that's what gives you basically the inventory that you are going to buy. So it's actually 400,000. So at the moment, how much are we incurring? So at the moment, we are incurring, as I said, if we are to look at this, the revenues, this is current. So the revenues, we said it is 10,000 per day times 6 days times 50 days or 50 weeks. So that is, at the moment, the revenue is 3 million. And the cost of sales is just 30% of 3 million. So at the moment, we are actually spending 900,000. So now, if we work on Sundays, we shall also spend another 400,000. So it means that the new cost, incremental cost, so all the new purchasing, if you are looking at it in terms of the year, as we said, it is this 900,000 plus the 400,000. So that gives us 1.3. And because we are exceeding 1 million, we are going to get 5%. So we can multiply this by 95%. So 1.235. So 1.235 is the new purchasing. And therefore, so now to compare this with what we had before, so the incremental costs is actually this one minus 900,000. So now what I'm trying to let you know is that although the cost of sales is actually 400,000, but because we are going to have some saving by buying more than 1 million, we shall actually have cost of sales actually being 335,000. So you can put it, instead of putting 400,000, you put this 5,000 as the cost of sales. Now you can have this one as a working one cost of sales. So that is the cost of sales. Then, so let's go and look at now the staff. So they are going to pay time and a half if you work on Sunday. So we can put a working here. Staff costs. So they are going to pay time and a half. And they are currently paying $20 per hour. So they will need 5 sales assistants for the 6 hours on Sunday. So that means, so Sunday staff costs will be, as we said, we need 5 people, each one working 6 hours, and each one earning $20 by time and a half. So 1.5, which gives you 900 per day. Okay? So if you multiply this one by 50, because they are going to be 50 Sundays, then you get 45,000. Okay, you can actually put that one here in this without a working, but it's better to do a working for it so that the examiner can follow what you are trying to do. And so then after that, then we have supervisor, the staff will be supervised by manager, is already employed. Then they just take an equivalent of the time during the week. Then also give them a bonus. Okay, so for the manager's bonus.
But how did we get the revenue here, the 3 million?
The what? The 3 million.
Yes.
They said that the sales revenue, the sales will increase by 60%. And remember, the average is 10,000. So we did 10,000. Then we multiply it by 6. Okay. Because this is per day, so we get the number of days. There are 6, Monday to Saturday. And then we shall multiply them by 50. So this is the revenue currently.
Okay.
Yeah.
Okay.
So the manager's bonus, they said, is going to be 1%. 1% of the extra sales generated on the Sunday project. So basically it means that it's just going to be 1% of this 800,000. So that is 8,000 as the manager's bonus. And then from there, then we have lighting. So lighting, they're saying that the store will be lit $30 per hour. So we can just do $30. Remember, they said that there are 6 hours per day. So that is 9,000 for the lighting. Now for the heating, 45 per hour. But now for this heating, they told us that it will be switched on 2 hours before the store opens. Remember, the store opens for 6 hours, so they open it. So that is 2 hours before. That means a total of 8 hours for those 25 winter weeks. So that means that you just multiply. You can put it as 2 plus 6 so that the examiner maybe knows that we are doing 8 hours. So, and they are charging 45. And they are doing it for only 25 winter weeks. Okay, so that is also 9,000. So after heating, there's also rent. Okay, now tell me about rent. Is rent going to feature in this calculation or not, and why?
It is not, because it is a monthly cost, not an incremental cost.
Yes, it's a cost which is going to be incurred on an annual basis, and it doesn't matter if we work on Sundays or not. So it is not a relevant cost. So rent won't feature. Okay. So I guess that makes all the costs. So which gives us 406,000 as the total cost. And then we can now get our. So now, because we have got revenue minus cost, this is actually net incremental revenue. Now, so because it's a revenue, we should open on Sundays. So that's the decision that we are making here. So as I said, so many different ways of asking these questions, and you just have to basically look at the question and logically think about it. But the decision is always going to be standing on what is going to cost you less, or what will give you more money. So now there are things that we have not.
But
Yes.
what do we base on giving the advice or the decision of opening on Sunday? Like,
So
what do we use to compare so that we can, when we reach some point we defend, we'll be like, Sunday we're earning more, something like that.
it's not a single thing. It's not a single thing. And if you have been looking at the question here, they have given us information to make us decide. For example, they told us that the profit will be lower on Sundays. Okay, so that's a bad thing. However, revenues are going to be more than average. So all these things that we have been doing, the numbers that we have been putting, the basis that helps us to open or close on Sunday is, in actual sense, incremental costs and the benefits, and then you see which one outweighs the other. Because opening on Sundays is going to be giving you some costs, as we have seen. Okay, all these ones that we have put here, cost of sales will increase because you are buying more things such that you sell on Sundays. You have to pay people some more money to work on Sundays. You have to pay bonus. You would have to pay lighting and heating. But at the end of the day, when you compare that to how much revenue you are going to get on Sundays, you still get a profit. And therefore, we should open on Sundays. So that's the logic that you normally use for all the questions. Like, you basically look at what are the costs of that decision that you have made vis-a-vis what are the benefits of the same decision. And then you determine based on what is going to be cheaper, or which one is going to give you more profit. Is that clear?
Yes.
Yeah. So now I said that we have assumed so many things. Because if you can see it when I don't know if you watch the movies, but if you do watch the movies, you know that on some days when there are discounts, some people choose not to watch movies on other days and come for that day when the discounts are. So it can be the same thing here, in that if people know that Sundays are going to have discounts, then customers will actually not buy on Saturday and wait for Sunday. But here we have assumed that this is all incremental revenue. That is assuming that all the people who are buying on other days have stayed buying on those other days, and these are just new people coming in. Okay, so that's something that you should know about the computation that we have made. In actual sense, there is even a question which probably is asking us about something of a sort. On second part of this question, they're asking us whether the time off and bonus is going to motivate the manager. Now we are looking at what motivates the manager. So let's first look at a bonus. Okay, a bonus means that this person is going to get more money by working on Sunday. Okay, so and let's see what the manager is getting. The manager is getting a bonus of 1% of the extra sales. So, and the bonus actually was already completed it, coming to 8,000. Now, this 8,000 is per annum. Okay. So now if it's per annum, what about per day? So remember how many days we are working extra? They are Sundays, and we have 50 of them in a year. So that is 160 per day. So that means that they are giving a manager $160 per day. But they said that they are going to pay the people working on Sundays time and a half, and they have been paying them 20 per hour. So if we are looking at the staff, what they have this is time and a half for $20. Okay. Let's consider just one person. So that means how many hours? 6 hours. 180. So you can see that the bonus given to the manager is less than what they are paying the staff working on Sunday. Okay? So this is not going to be motivating to him. Okay? And you can actually say, even with the time off. The time off, of course, we are going to discuss it, but at least what I want you to know is that the manager is not going to be happy getting less. Okay? Because these other guys are given 180 per day, whereas him is going to get 160 per day. So now, and also given that the bonus is linked to the incremental revenue, there is a chance of him getting even lower than this. Okay? Which will further make him unmotivated. So that's for the bonus. Time off. Now this one you can reason it. You can reason this one out by yourself. Some people do not consider the fact that you are going to give them time off in a week to make them work on Sunday. Okay? So now, as we are going to say here, some manager, or say the manager, may not be happy with the time off during the week, since it may deprive them of quality time with their families on Sundays. Okay, I've seen this, some people, especially when I was in a bank, there are some branches that would open on Sundays and then they give you a day off in the middle of the week. Some people would not like that because they want to go to church on Sundays. They want to be with their families, and they feel like it's not a good compensation for them to work on Sunday. So that can be something. Also, given the bonus, or given the manager is not given monetary compensation on Sundays, except the bonus, this may not be sufficient for them. So these are some of the points that now, when you go and look at the solution, you realize that maybe they write a lot more than this, but you have to remember that you don't have time to write so much. You need to write points that make sense. So you don't want to go over somebody writing everything that you have in your head on a number, and you end up actually not finishing the other numbers. So that's the problem with some people. So this is what we can write on the second part. And then on the third, looks at the discount and promotions on Sunday, whether that's a good idea. So is it a good idea? Remember, we are having only 4 marks, so don't write a lot. And we know that it might be a good idea because it seems to be increasing revenues. But remember, that assumption was that people are not coming from the previous. So one of the things that can happen is that the buying patterns may be altered. Okay, like I said, people can change from buying during the week to buying on weekends, which will reduce the profitability of bits and pieces. Because don't forget, we are giving so many discounts. So if people are buying on the days of discounts, that means that you are getting so many sales but less profits. Then the other thing is that the quality may be affected. Okay, and how does quality affect here? Quality is sometimes a perception. So lower prices may signal a declining quality for bits and pieces, which may have negative impact on the customers. So even if they are selling the same exact thing on the weekday as they sell on the weekend, some people may think, okay, because they are giving so many discounts on Sunday, perhaps they are not giving us the same quality that they give over the weekend. Then also, you can create complaints from the customers who buy during the week, as they will feel unfairly punished. Okay, imagine you've been selling something at 100 for us, then other people on Sunday, you sell them at 70. So we shall feel like, why are they selling something to us more expensive than others? We can take offense. So those are some of the things that we may be dealing with or contending with. Okay, and you can get time and look at the solution to this and see whether the points that have been made, how they wrote them, how they did the calculations, so that you understand more. But most importantly, at the end of some questions, there is examiner's comments. I don't know if you have seen them, but they kind of give you an idea of what mistakes were made by the students who answered that question, and therefore what to avoid. Okay, so always a good idea to go and read those comments, because ideally you're supposed to read them from within the ACCA portal, but some people never go there. So at least you can at least find them here and read them. That will be a good idea. Okay, is there any question before we move on?
No.
Okay. So I suggest we do one more question, and then we can call it a day. So there is a question called stay clean. Again, it's about decision making. This one has quite a lot of information given to us. So it kind of is an old question. So probably that's why it has a lot more. But it's a good idea to learn the concepts. So here, again, they are telling us to determine whether or not it is worthwhile ceasing to produce the TD now instead of waiting for 12 months. So here they don't want us to do time value of money, because this is usually done in financial management where you consider the discount and all that. And then here they want us to explain two pricing strategies that could be used to improve the position of the business, assuming that the TD continues to be made in the period. And then also discuss three scenarios or three issues that Stay Clean should consider if you decide to outsource the manufacture of one of its future products. So now if we are to look at what has been told to us, they're saying that Stay Clean manufactures and sells more range of kitchen equipment. Especially the product range contains a dishwasher, a washing machine, and a tumble dryer, or the TD. The TD is the old design and has for some time generated negative contribution. They expect that in 1 year's time, the market for the TD would cease. People switch to a washing machine that can also dry clothes after washing. So they're trying to decide whether or not to cease the products of TD now or in 12 months' time, when the new combined washing machine dryer will be ready. So here, that's what they've given us to help us with that decision. And so here they have given us information: the selling price, the revenues, the sales volume, and total variable cost for the products are given. So DW, we have selling price, material, labor, contribution, and then we have the annual sales. Now, some of the customers that buy a TD also buy DW and the washing machine. Therefore, 5% of the sales of the washing machine and DW will be lost if the TD ceases to be produced. Okay, that is something that you should remember, because now we are going to now decide whether to discontinue the TD now or 1 year later. So they are telling us that if we discontinue it, we shall lose 5% of the sales of the washing machine and the dishwasher. All the direct labor force currently working on the TD will be made redundant immediately if the TD ceased now, which will cost 6,000 in redundancy payments. If retained, at the cost of 3,500 to enable them to produce the new washing drying machine product. Recruitment and training costs of labor in 12 months' time would be 1,200 in the event that redundancy takes place now. So that is also something that we shall discuss and deal with. Then Stay Clean operates a just-in-time policy, and so all the material cost will be saved on the TD for 12 months if the production ceased now. Equally, the materials cost related to the lost sales on the and the dairy will also be saved. However, the material supplier has a volume-based discount scheme in place as follows. So if we buy between 0 and 600,000, they don't discount, but they start discounting at these other rates. So we use it for all the materials for the products, and then the figure above in the cost per unit table for material cost per unit are a net of the discount that we already qualify for. So the figures are above here. Okay, cost per unit for materials, these ones already have the discount in it. Now, the space in the factory currently used for TD will be sublet for 12 months on a short-term lease contract if we stop now. And the contract will give us 12,000 as income. Then the supervisor, who's currently cast as an overhead, supervises the production of all the three products, spending approximately 20% of their time on the TD. They would continue to be fully employed if TD ceases to be produced now. So these are the things that will happen. So what we normally do with this kind of question, because this question is asking us, should we stop now or 1 year later? So again, we should just look at what would happen if we stopped now in terms of benefits and costs. And then we shall determine whether we should actually stop now or later. So now, so we can go and so we are looking at Stay Clean. Okay. So now the first thing is that if we stopped the TD right now, we shall lose revenue that would have made from it. So we have lost revenue. Now revenue we would have made would be from the sales of the TD. Remember, it is 80,000 or $80, and there are 1,200 units that we would expect to sell. So all of that 96,000 will be lost. And let us say whatever is lost is negative. So we shall lose revenue, but we shall also, since we are not going to, because we said that when we lose, because the way you should do it is to come from, we are still here on this first note. So we have already talked about the revenue. Then we have materials cost, we have labor cost, we have contribution. Okay. Now for materials cost, they told us that we are operating a just-in-time. So because of that, we shall not incur the costs. If we actually stop now, we shall not incur the cost for the TD, and we shall not have saved it in a way. So that is something that we can ignore. But for the labor, the labor cost is $40, that is per unit. So if we are not going to make this, we shall still save that. So save the labor cost, $40 per unit. The units are 1,200. So that is 48,000. That will be saved. Now, then they said that we shall lose some contribution from for VM and then DW, 5%. So, lost contribution. So, 5%. So, remember it is 80, 170. So, 80 times 5,000 plus 170 times 6,000. But we are only going to lose actually 50%. I mean 5%. Okay, 5%. So we shall lose 71,000. Is it 71,000? Let's see. Contribution per unit, 80 times this contribution includes materials, but remember materials, we said that they are going to deal with them because we are going to save, since we are dealing with the just in time. So we should add back the materials cost. So 80 plus 70, that is, we can put it here. Also this one, we add back the materials cost of 100. So that's the loss contribution, but that does not consider the materials. So after that, we can also go to the labor. If we stop now, all the labor until they will be made redundant. So redundancy costs, if we stop the TD, we shall incur 6,000 in maintenance payments. But if we kept them, then we would retrain them at 3,500 to produce a new washing dryer. Then we shall also incur retraining of those people, 1,200. So now here there is some kind of calculation that we need to make. And I don't want us to put it in one cell. So let's put it here. Redundancy. So there will be redundancy costs. That is 6,000. But because we have closed and paid those redundancies, we save 3,500 that we would have incurred to retrain the people. So retraining, $3,500, and then recruitment and training cost of 12 months time would be 1,200 if we done takes place now. So there will be a recruitment cost. Now you didn't have to have this split. You can actually put all of these things down here. But I'm trying to do this per number that we have here. So number 3, okay, number 3, this is the working, and I'm putting this as the cost. Okay, these are the Dana's cost, 3,700. Okay. Now, so now let's go to the materials. Okay. And the materials are going to come sort of in this way, because although we shall not incur the costs if we cease now and all that, but there is going to be a discount that we are going to lose out. So we need to work it out. So if you incur this much, you get the discount. So we need to determine how much discount are we going to lose. So now, to do that, we may need to have a working. Let's say discount. Okay, let's call them supplies. Now, so we can look at it for the DW, the washing machine, and TD. Then you can get you need to know the cost, then discount. So this one you can call it net cost. So this is the gross cost. So now, right now, current buying. So that is the units that are given to us above, 5,000, 5,000 multiplied by 70. Then this one, 6,000 multiplied by 100. And then this is 1,200 multiplied by 50. So that's what we have. So the net cost at the moment is 1,010,000. So, and then they told us that if we are within, after 960 and above, we get 5% discount. So shall have a 5% discount. And therefore, if we multiply this by 1 minus this, that means that we are paying only 959. Oh no, this is the one that they told us that this amount here, the figure given is already having the discount. So Actually, to get the gross, we add it. Okay? And we don't add it like that. I don't know if you remember if you are looking at a gross margin or a markup. So this figure here is already 95%. So to get the other 100, you just say this figure divided by 1 minus this. So that gives us 1063158 as the amount that would have been the cost. Now, when we lose all the TD, everything that we are making disappears. So when we lose that, and of course,
let's go back to gross cost. But that said that the net cost is inclusive of the 5%. I thought it's supposed to be 1,060,500.
No, that one would have been that you are just increasing it by 5%. But the net amount already has been discounted by 5%, so it is 95%. So to get back to the gross, you divide by 95%. You do like this.
Oh, okay.
You do like this. If this is 1,010,000 and it's 95%, what about what is 100%? Put your X, then you cross multiply. You get. You remember
Yes.
this one from math, eh? So when you cross multiply, you end up saying that this one divided by 95%.
Yes.
So now by losing 60,000, that is the TD. So how much have we lost? 63,158 in gross amount. But we also are going to lose the other 5%. Okay? The one of related sales from the dishwasher and the washing machine, 5%. So that's that becomes 47,500. And if we are still, remember we have been at 5%, so we have lost another 50,000. So which means that now we are at how much? For the dishwasher, we are at 332. Washing machine, we are at 570. And the TD, we have nothing. So we are at 902. We are 902. Yes. 47,500. 902. Okay, we are at 902. So if we are Let's first get this one here. We are at 950. We are going to use the gross amount 950 because we don't know yet which percentage applies here. So 950,000, that's what we are at. And when you go to this, at 950, we are in this range here of 3%. So that means this is 3%, which also means that if this is 3%, what's the net cost now going to be? Because we just have to reduce this by 3%. So it becomes 921,500. Okay, so these ones we can leave. They are not going to add up to this because, okay, now, so if we were at 1.10 and now we are 921,500, so the difference is 101 minus 921,000. So 88,500, we shall have lost that. Okay.
But I would like to take you back on the loss of related sales on
Yes.
dishwasher and machine washer.
5%. Remember they said that
5%.
yeah, they said that some of the customers who buy TD also buy the dishwasher and washing machine. So when we stop
Yes.
the TD, we shall lose 5% of the sales. So I'm doing 5%.
Okay, understood.
The current buying, yeah. Okay, so
I've understood.
yeah. So we shall also lose that 88,500. So that we shall that we shall not lose it actually. Right now we are spending 1.1 million and then we shall only be spending 921, so we shall actually have saved it. So supplier payments saved because we are buying now less, and that is 88,500. Now you have to be very, very careful with your conventions here. How we are doing it here is that expenses are negative and losses, and then the positives are savings and incomes. So now, after that, the next one was to do with the renting. So if we close now, then we can let this thing out for 12 months. So we shall get some income. Sublet income. 12,000. Okay. Income. Then the supervisor right now. So now the supervisor, if you look at the supervisor's income, is an overhead. And all the supervisors, all the three products. Now this guy here, even if we stop making the TD, he will continue to be fully employed. So there's not going to be any relevant cost regarding the supervisor. But if you don't put him here, they think that you may not know how to deal with him. So you have to put them and put 0 and explain something that this is an overhead, just an apportionment of a cost which is already going to be spent regardless of whether we stop or not. So that's why we don't consider that to be a benefit whatsoever or a cost. So,
Albert,
yeah, yes,
I would like to take you back on supplies.
on the supplies.
Yes. Kindly draw more light on the after us getting the lost the when we stop producing TD, we're
Yes.
going to lose 60 of the money we're supposed to get, $60,000, and also our discount of 5%.
Mm.
Is it true?
So for
So
the
how do we get this 47? Yes.
for the
From there, I got it
okay,
there.
okay. Remember, we are going to stop making the TD, so we shall lose this 60,000, okay, which is the 63,158.
Yes.
If you consider that it was having
Mm.
5% discount.
Yes.
Ah, then also, because when we stop selling TD, we shall lose some sales from BW and VM, which is
Yes.
at 5%. So that's the
Mm.
47,500.
Yes.
Yes, and we are still
Mm.
considering it at 5%, the one that we had before. So basically, what we are saying is that
Mm.
we are trying to get back to the amount that we would lose in terms of gross, considering that already we have been at 5%, so we reduce it. So that's how this becomes 50,000. So now from there, you can now add all of these, or rather subtract. Okay, so you end up with 950,000, which means
Mm.
that you are no longer buying things worth 1.063 thousand, but rather 950,000.
Mm.
Yes. And
Mm.
950,000 lies in this one of between 900 and 960, where you get the
Yes.
3%.
Okay.
Okay, so that's what we'll put a 3% here, and then we get what is the equivalent of that in net cost after removing the 3%.
Mm.
Get this one and subtract
Yes.
the 3%. So from there, then we
Okay.
say, okay, that means that we have been paying the client 1.10, 1.1, 1.01, but now we are paying them 921,500. So we have saved 88,500. That's what we put here. Supplier payment saved.
Understood.
Okay. So after getting this is the net cash flow, and it's a negative. Now we need to just calculate. The question was saying whether or not it's worthwhile season to produce. And it seems like if we stop now, we make a negative cash flow.
Mm.
Therefore, we should not cease now, but rather discontinue the TD after 12 months. So you see that the decision is not exactly the same as the one before in the other question, because the logic of how you choose it is different in this case. Uh, Not so much different, because the point is that we are arriving at whether it is going to make us more money or lose us money, the decision that we are making. And since this one is going to lose us money, we should not cease now, but rather we should produce the TD for this year and this continue at the end of the year. So that's how that decision would be made. Uh, is that okay?
Yes,
Yeah.
Albert.
Okay. Now, the other thing they are asking is explain the two pricing strategies that could be used to improve the financial position of the business if we continue to make the TDs. Now, uh, the pricing strategies are very many, not very many. The one that the one that we have penetration pricing, we have price skimming, we have complementary, we have product line pricing, we have price discrimination. I think these are the ones that we have, at least at the level, at our level. But the ones that are eventually going to be needed here are these two: complementary pricing and product line pricing. And the reason is simple. Complementary pricing means that if you have two things that people seem to be buying concurrently or together when time they buy, those are things that may be complementary to each other. Like right now, with this we know that if you buy a dishwasher, okay, and a washing machine, then you might need a dryer, the TD. So those are complementary. So because they are kind of used together, you would do actually just press them such that if you buy one, the other one you get a discount. Okay. So for example, if you buy a dryer, then you get a washing machine at a lower cost. So which can be a good thing. That is complementary. Then product line pricing usually considers those items that are considered part of the product line. Like if you are going to buy things that you use in, like for example, a kitchen, or like where you're going to do your laundry from, then you can sell them together. So like you can say, if you are going to upgrade maybe your kitchen, there is a combo where you can get the DW, WM, and TD at this one price. So which means that is going to kind of drive sales for all of them. And then of course you can make a profit by looking at a price that still gives you a contribution which is positive, but in a way being a discount to the rest of the people who are buying. So it's just a matter of looking at how much you are willing to lose so that you get the sales up for all the things and then you get profits. Is that clear?
Yes.
Of course, these others, I'm sure you know about them, but they don't work here for reasons that the products don't seem to have any contribution whatsoever from the two. Then the other thing is about outsourcing, issues to consider. Now, outsourcing means you are letting someone else take charge of something that you've been doing. The biggest problem is quality. When you are the one doing something for yourself, you know what you probably need, and therefore you can be able to set the quality standards that you need for your products. But if somebody else is doing it for you, then they may not do the job that you expected. So it could actually come out poorer than it is. Or the people might perceive it poor, even if it isn't. Okay. Another thing you can look at is the cost. So the outsourcer may actually charge you more than you would have incurred by yourself, in which case it doesn't make sense. Uh, Remember here they are looking at things that should be considered, right? So you consider the cost, you consider the quality, you can consider the reliability. Here we mean if you want them to supply to something that you're going to need, you don't want to call them and say, I want this, and they say, oh, we haven't made it yet. Okay? So some of those that you can consider, but also loss of expertise when you outsource. So if you outsource and eventually want to come back and do it, you may no longer be able to do so because all the people that were doing the work probably have moved on to other companies, or they are now doing other things. So you have lost that talent and expertise. So that's one of the other things that you consider. All right, so I want to know if there are any questions, but this is the end of today's session.
Maybe what I'm requesting,
Yeah.
can we do some budgeting next time?
Okay. Okay. So, okay, next time we shall do budgeting.
Also,
Mm.
and also mostly section B and C.
We are
I'm having problems in interpretation of questions.
of what? Of section B and C?
B and C, yes.
Okay. I was going to leave you to be the one to do A and B. That's why I was
Okay.
trying to aim at C.
Mm,
Yeah, because anyway, I don't know. Anyway, we shall see how to deal with that.
yes.
But okay, next week we shall budgeting questions. Have you
Mm,
seen some questions I put up there already for section A and B? I don't know if you saw.
yes, I've done some sessions.
Okay. Anyway,
Mm,
to simplify it, perhaps you can let me know which questions you are facing difficulty interpreting. Uh,
mm,
then we shall handle those. But for next week, on Wednesday at least, we shall
mm.
do some questions on budgeting.
Okay, please.
Okay. Okay. Have a
Mm,
good night and see you next Wednesday.
you too. Thank you.
You're welcome.